If you look at Treasury reserves today, total Treasury reserves are about 700 billion. And so a million Bitcoin at roughly today's prices would be 100 billion. So that would be about 14% of the Treasury at today's prices. And it could dominate if we're right and the price goes, our base case has been, in the $650,000 to $700,000 range. Our bull case is around 1.5 million. The more
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses Bitcoin and crypto. Cathie Wood, a prominent hedge fund manager, has reiterated her assertive projection that Bitcoin may attain a value of $1.5 million by the year 2030, a forecast she has consistently upheld over the past several years. Wood, who has consistently expressed a positive outlook on Bitcoin and the wider digital assets market, has become increasingly optimistic in light of President-elect Donald Trump's election victory. The expectation is that a Trump administration could catalyze significant growth in blockchain technology and other disruptive innovations, driven by anticipated federal deregulation, which has been a defining characteristic of Trump's policy framework. Wood identifies the intersection of 5 pivotal disruptive technologies: artificial intelligence, AI, blockchain, robotics, genomic sequencing, and energy storage as the primary catalysts for a significant transformation in the global economy. The potential transformation is likened to the significant historical impacts of the telephone, electricity, and the internal combustion engine during the early 1900s. Wood argues that the ongoing wave of innovation is poised to create a significant economic transformation, forecasting that these technologies may act as a catalyst for an extraordinary economic boom, which could result in a substantial rise in real GDP growth, comparable to the 5-fold expansion observed over the last century. Wood's perspective on Bitcoin is grounded in her overarching thesis that technological innovations, especially in blockchain, will significantly transform the financial environment. Bitcoin, being the leading cryptocurrency, is positioned to gain significantly from the integration of these advancements, particularly as blockchain technology becomes increasingly essential to worldwide financial frameworks. Wood expresses a strong conviction regarding Bitcoin's long-term value, underpinned by her perspective on the extensive disruption occurring across traditional sectors such as finance, healthcare, and energy. This disruption is anticipated to enhance the demand for decentralized financial solutions. This highlights the opportunity for substantial returns in the cryptocurrency market, especially for those aligned with Wood's perspective on a future increasingly influenced by decentralized blockchain technologies. And lots of things Cathie Wood discusses, so please watch the video to end. And share this video, and subscribe our channel Everyday Finance. Thanks.
we approach not only Bitcoin, but the entire crypto asset ecosystem from the point of view that they are really 3 revolutions taking place at the same time. Bitcoin is leading the charge in the monetary revolution. We do believe it is the first global, digital, decentralized, private, meaning no government oversight, rules-based, and that's extremely important, monetary system in history. And from the beginning, we have always thought it's a big idea, but we also believe with time now, we believe that it is the biggest idea, the biggest of the 3 revolutions. We could see it, and you can go to our big ideas 2024 and 2023. I think this particular, what I'm about to say now, you'll find in 2023, not 2024. But there we delineate our price targets, bear, base, and bull, And we show how we get there, all the roles that coin is going to play. It is digital gold for sure. And in our bull case, we think it could be worth half of the gold market. So the gold market today is around 15 trillion. And so half of that would be 7.5 trillion. Just that opportunity is 6 times higher than where we are with Bitcoin. And that's just one of 7 roles that we think it will play. Very important is, especially since this new administration has stated that it's going to support Senator Lummis and her proposals to include Bitcoin in the Treasury. And, just penciling that out a bit, if you look at Treasury reserves today, total Treasury reserves are about 700 billion. And so 1,000,000 Bitcoin at roughly today's prices would be 100 billion. So that would be about 14% of the Treasury at today's prices. And it could dominate if we're right and the price goes, our base case has been, in the $650,000 to $700,000 range. Our bull case is around 1.5 million. The more we see validation from the government, from regulators giving a green light for ETFs, from other nation states, El Salvador was the first. Russia is talking about adding Bitcoin to its reserves. That could be a very important contributor. One of the biggest is going to be institutional investment. This is a new asset class. And what does that mean? It does not behave like all other assets.
Michael Saylor, chairman of MicroStrategy, has reiterated his optimistic outlook on Bitcoin, even in light of the prevailing market decline. Saylor recently communicated an important message to Bitcoin investors, recommending that they wear a hard hat in light of the considerable volatility currently affecting the market. He included an image of himself donning an orange hard hat emblazoned with Bitcoin, representing his conviction that investors in Bitcoin ought to maintain their fortitude during market downturns, akin to construction workers who utilize hard hats for protection against potential hazards. In light of the prevailing market challenges, Saylor continues to adhere to his long-term strategy for accumulating Bitcoin. Saylor's communication underscores his steadfast belief in Bitcoin, irrespective of transient price variations. Despite experiencing price declines, exemplified by Bitcoin's drop to $1,700 in the past, Saylor has consistently dismissed the notion of liquidating assets for immediate gains. He asserts that divesting from Bitcoin would erode the confidence of the Bitcoin community in MicroStrategy, highlighting that the company's dedication to maintaining its Bitcoin holdings is integral to its strategic framework. Saylor's approach is notably divergent from conventional market practices, where a significant number of investors tend to respond to price downturns by selling off assets to limit their losses. Saylor and MicroStrategy persist in their strategy of increasing their Bitcoin holdings, perceiving any decline in price as a strategic opportunity to enhance their accumulation. The strategy of purchasing during market downturns has positioned MicroStrategy as one of the foremost corporate holders of Bitcoin, resulting in a balance sheet that is significantly skewed towards the cryptocurrency. Alongside his Bitcoin strategy, Saylor has indicated potential modifications to MicroStrategy's fundraising tactics to enhance leverage. Having achieved several of its objectives ahead of schedule, Saylor indicates that the organization will persist in capital accumulation, mainly via fixed income markets, while employing a more strategic approach to leverage in order to bolster its growing Bitcoin holdings. This suggests that MicroStrategy is strategically aligning itself to leverage potential growth in Bitcoin, while simultaneously addressing the risks linked to its substantial Bitcoin assets. Saylor's strategy highlights the increasing institutional trust in Bitcoin as a sustainable long-term investment opportunity. His strategy of utilizing capital to enhance Bitcoin acquisition indicates a conviction in Bitcoin's ability to surpass conventional assets in terms of performance over an extended period. Nonetheless, this approach carries inherent risks, as it subjects MicroStrategy to the fluctuations of Bitcoin and may affect the company's financial stability during an extended downturn. Saylor's steadfast dedication to accumulating Bitcoin, regardless of transient market volatility, establishes MicroStrategy as a frontrunner in the realm of corporate Bitcoin integration. This strategy presents considerable upside potential, contingent on the continued appreciation of Bitcoin. However, it also entails risks linked to Bitcoin's inherent volatility and the growing leverage utilized by the company. This scenario presents a dual narrative for investors, highlighting both the potential for significant returns and the inherent risks associated with substantial Bitcoin investments. Let's get back to Cathie Wood interview.
Now, it means it has a low correlation. Anyone with a fiduciary responsibility, any asset allocator, is looking for new asset classes to diversify and increase the return per unit risk over time. Bitcoin is doing that. And I think portfolios without it are going to, over time, look more and more like they're in the dark ages, that they're missing an entirely new asset class. So we think that could be huge as well. Now, why is all of this important? These are incremental opportunities. Of the 21 million units that will be mined in the long term, that's the limit. We're already over 19.5 million. So 1.5 million to go. And, there's a huge amount of incremental demand out there. So I think the reason the price is moving like this is more and more people are doing the arithmetic. I don't know if you want me to go into the other revolutions, but we do believe that Bitcoin is the prime mover in the monetary revolution, whereas Ether and Solana will be the prime movers in the financial services revolution and in what we call the next generation internet revolution, which is, like Bitcoin, we're talking about digital property rights here. And now that more and more of our time is spent online and more people, especially younger people, get their social status, more and more of it, online in the form of, Gucci skins or other statements like that. Digital property rights this is the first time ever, are going to become very important. And I know from my economics background that the best way to lift people and countries out of poverty is with immutable property rights. And I think that's one reason El Salvador has introduced Bitcoin. This is a form of digital property rights. NFTs, for those of you who have played those in the past, that's a form of digital property rights. So we think that's the long tail, and we don't know how big it's going to become. We do know that a lot of consumer companies, especially the luxury companies, are very focused on this space because there's going to be a positive feedback loop between social status building online and the desire to express it offline as well.
Bitcoin has recently undergone a significant downturn, decreasing from its high of over $100,000 to $94,000, indicating a change in market dynamics. The recent price correction has raised some apprehensions. However, various critical technical indicators indicate possible future trends and key levels to monitor. The recent rally of Bitcoin has seen the short-term rising trend line, which provided support, now breached. This development indicates a potential weakening of bullish momentum in the near term. The upcoming key support levels to observe include the significant psychological threshold of $90,000 and the 50-day exponential moving average, EMA, positioned at $91,920. Should purchasers engage at these price points, they may establish a buffer to mitigate additional downturns. In light of the recent uptick in selling pressure, as evidenced by volume analysis, the Relative Strength Index, RSI, stands at 43, indicating that Bitcoin is nearing oversold conditions. Historically, this situation frequently results in a relief rally or a consolidation phase, during which the market stabilizes prior to making a rebound attempt. Analyzing the current market conditions, Bitcoin remains positioned above its 100-day EMA, presently at $82,900, a level that has historically provided robust support in times of market declines. As long as Bitcoin sustains its position above this threshold, the overarching bullish framework continues to hold firm. A movement above $97,000 would indicate a possible recovery in momentum, potentially initiating a new rally. In the near term, Bitcoin's performance will be contingent upon its capacity to maintain critical support levels. Should the selling pressure persist, the $85,000 level could come under scrutiny, suggesting a potential for a deeper correction. Should buyers re-establish their dominance, Bitcoin may find stability and possibly rebound to the $100,000 threshold, indicating a resurgence in market confidence. The current market dynamics indicate a phase of uncertainty. However, the longer-term bullish outlook remains intact as long as Bitcoin maintains its position above critical support levels. The observed market behavior underscores the volatility that characterizes Bitcoin's price fluctuations, driven by a combination of technical elements and overarching market sentiment. Investors should remain cautious, but watch for signs of stabilization, as these may present buying opportunities, especially if Bitcoin manages to bounce back from key support zones. Bitcoin is currently in a period of price correction, with key support levels at $90,000 and $82,900 being critical to its short and medium-term outlook. Should these levels remain intact, Bitcoin may be poised to recover its upward trajectory. Conversely, a prolonged decline beneath these thresholds could indicate increased downside risk. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.